Hey guys, hope y'all are well today. I'm just gonna do a update on all my PMCCs I hold and a covered call that I hold as well. Just thought I'd do maybe a weekly update, or I don't know. I never shared all of my positions in PMCCs, so today I'm going to do that, and we'll look over and see how they're doing, and I'll give you my thoughts of how I'm going to handle them moving forward, or at least what I'm thinking I'm going to do. So, if you're new here, please like, share, subscribe. This channel normally talks about ETFs and income investing and things of that nature. Just getting into the options a little bit, and I'm doing those mostly on Wednesdays. We also do a live stream every Sunday, me and Dave from Hidden Freedom Investing. So if you want to check that out, I'll leave a link down to his channel and up above. I'm not on there every week, but Dave talks about options every week, and I've been on there quite often. So I don't know if I'm co-host or what, but it seems like it. Down in the pinned comment down below is a way you can support this channel. M1 Finance links, Amazon links, all that good stuff. The Amazon link, you could just click on that, go shop, and buy whatever that you normally buy. And Amazon gives me a small commission on qualified purchases, and that is a great way to support the channel at no cost to you. So let's dig in today. We are looking at all my PMCCs, and that we're going to start with Pfizer. I did this one last week. There is no changes, but we'll just go over it, and I'll tell you what my thoughts are. Pfizer just keeps going down, okay? And I kind of don't mind. I would like to keep this PMCC on. Right now I have 3 contracts altogether, and my average cost of those 3 contracts is $11.45. I've been able to collect $426.82 in covered call premium since January 25th, so that's pretty good. But the LEAP premium keeps going down. So if I were to close this out, like for instance, this is going for about $9.50 today. So you'll see I'm pretty much, if I were to sell out of the LEAPs and close everything, assuming these last 3 covered calls expire worthless, I'd be at about a 4.6% loss cash on cash because of the LEAP profit. So I would like to keep this around, and if it can, allow me, if it can just settle off here and, allow me to keep selling covered calls, that's, right there, that's 3 covered calls at 80 cents a piece. That was a little over a month out though. So that's $240. I'd probably look to add one of these, add a LEAP to here so I can start selling 4 of them, but we'll see how it goes. I'm not too upset with it. It doesn't bug me too much. So that's Pfizer. So next one is my ED PMCC. I have ED. I'm going to hear it in the comments too. I have ticker symbol ED. That's Consolidated Edison, which is a utility. It is, I believe, a dividend aristocrat. Don't quote me on that, but I believe that to be the case. Right now, the stock is going down, just like most of my PMCCs. And right now, it's at 67.67. When I opened this PMCC, the price of the stock was $72.54. So I have a $50 strike on the LEAP call option, and currently that is selling for $18.50, and I paid $22.90 for it, which again is fine as long as I can keep selling premium against it. As if this stock can find a floor and kind of settle out, I'd be happy with that. But you can see I've been selling. I sold the first one on January 25th and collected $1.22. Closed it out on February 1st at 40 cents and opened another one that I only held for 10 days, and I closed it out for only $4.20 profit, because this was actually in the money, and they were having the dividend that week. And so I bought back the contract so the shares wouldn't get called away. Okay. Or I wouldn't be assigned shorted shares and owe the dividend. So right after that, that day after, I sold a covered call month out at 72 strike, collected a dollar on that one. So right now we're down. If you take into consideration the current price of the leap, some say you really don't have to do that, but that is what it is. So right now, right now I am not in a covered call. So I pulled off a covered call, I think today, and I'm waiting, or yesterday, and I'm waiting to get back into it. Because see, right now, the March 19th covered call is going for between 70 and 85 cents, and I'd really like to get a dollar on it. If we get a up day in the market for Consolidated Edison, I can probably squeeze a dollar out of that for a month, and that's what I'm looking to do. Next up is probably the easiest one that probably everyone should start with, and that's AT&T. And I got a plane going overhead. You can probably hear it. AT&T, this one is in the money currently. I'll probably roll this one because I like this one. This one's easy to do, and it's a range bound stock. So the share price doesn't move very much, and that's what I like to see in a PMCC. Because you just keep collecting premium, keep selling those calls. Right now I have one on expires March 12th that I collected 54 cents on. Strike price is 29. And the stock price currently is 29.18. So if it heads a lot higher, I'll just close this on out totally. But if it sticks around here, I'll just roll it. And currently we are up 13.66% on this one. Next one that I haven't shared with that's new to you guys is KLOG. I did a KLOG PMCC, and I'll probably be closing this one out. I have a 40 strike that I opened this with when the price of the stock was $58.01. I paid $18.30 for the leap. Leap is going for about $19.50 right now. I've collected $2.10. Is that right? Yeah, $2.10 in premium over 2 weeks? Yeah, basically 2 weeks. We'll see how this goes. Right now, my last strike was at $57.50, and Kellogg's has had a run up. So instead of rolling that, I'll probably just take it off. And reason why I'm taking off some of these is because I like to trade options, my cash secured puts, in Interactive Brokers, and these leaps absorb your excess liquidity. So when you have an issue in the market, like we did yesterday, Tuesday, where the market kind of pulled back, that could be really volatile in a options portfolio. So you need some liquidity in your account to be able to handle the margin expansion, the maintenance margin expansion, and your buying power dropping at the same time. And that's what happens when a market kind of pulls back. So you need to have some excess liquidity in your account in case of those times like we had yesterday. And, me tying up, I think it was, $1,800 here in Kellogg, and, $2,300 in Consolidated Edison. That can have an effect, especially on a smaller account like my own. Okay, so that's Kellogg. I'll probably look to close that. And last but not least is my covered call. I actually bought stock. I actually bought 100 shares of Kroger on February 10th. Price of the stock was $33.82. I just kind of repurposed this chart. This is not perfect, but it works. So I paid $33.82 or $3,382 for 100 shares of Kroger. On February 10th, and I sold a covered call for $34.50 and collected $51 from that. Closed that out on February 22nd, which was Monday, for 11 cents, and I reopened one for a week later, which is March 5th, at the same strike at $34.50 and collected $59. So I'm happy with this one so far, and if hopefully Kroger has earnings coming up, and hopefully they don't crash and burn where I can't sell a covered call against it, but we'll see. But I've always wanted to own Kroger. Grocery stores, I mean, you got to eat. I like the food space. It's not exciting. It's not, it's not high-flying EV stocks or tech stocks. It's just boring companies that can make you money. On the cash secured put side, yes, there's not very much premium, but they're pretty stable, pretty easy money, and they don't have a lot of big swings that can really test your mettle in this options market, right? Just yesterday we had maybe a 2% pullback in the market, and people were getting crushed, and that's mostly from stock selection. I felt it too, no doubt. I felt it, but I didn't feel it as much because I assemble my options portfolio sort of like how I would assemble a long hold portfolio. I diversify among sectors. I get consumer staples, I get utilities, and all of that. So I'll probably talk about that a little bit more on next week's video. I'll see if I can put something together about how I assemble a portfolio and what I look for. So hope you guys enjoyed this. If you have any comments, leave them down below. If you want to see any videos on anything in particular, I'm not very technical as far as options are concerned. I don't want to. I don't really talk about the Greeks and all that mess. I like it. I like to keep things as simple as possible. Okay. So a lot of things I can't explain cleanly or in a super simple manner, then I don't touch it. Right. So hopefully if you have any suggestions, leave them down below, comment, like, share, subscribe, do all that good stuff, and we'll talk to you later. Thanks. Bye-bye. I am not a financial advisor. The information contained in this video is for entertainment and informational purposes only. It is not intended to be investment advice. Please seek a licensed professional for any investment, tax, or legal advice. Thank you.